Boy, our timing turned out to be great. Look at this drop we just had. Big spike down. I don't know what started it, but it was a fun little drop. Not yet. I will later. I rested. I didn't sleep. There was just too much action in the market. It was good conditions and I was awake. So I decided to just stay with it. And I'll do this session and then probably take a nap before the open. That's my plan. We'll see. Yeah, a machine that breaks down frequently. But I've managed to get pretty good at working around my sleep, kind of out of necessity. All right, water here. Uh, One thing about the overnight session you got to be careful with, you don't want to look too hard for continuation of moves. Sometimes moves happen very suddenly like that we just had, and they don't necessarily keep going very far. It's a very interesting environment. Peter's joined us. Welcome. We'll get started in a few minutes. Going to give people a chance to get here. I'm just getting kind of going. I'm rekindling my energy with some water and some coffee. This is a very unique time of day. It's you have to, if you're not teaching a class, what you should do is have something else to do besides trading, and then but be ready to trade. And the reason I say that is because there's a lot of periods of time you can spend waiting for something to happen, and then it does really big, like we just had, and then it gets quiet again for a while. Looks like we're going to push down a little more here. The energy's picking up. You can see the volume's much heavier to the downside, but there's buyers on the wicks there. So very, very classic for this time of day. This next hour from now till 12:30 my time, we get stuff going on in Europe, and the futures here always react speculatively to it. Oh, let's see. I'm just looking right now at this volume here. It's pushing down on a little more aggression now. There might be a long nibble there again, but be careful. This low could get taken out. Probably will. I always look for the liquidity for clues. So the liquidity's clustered at the quarter number just below us. So 95 down to 92 and a half, there's a cluster. And then there's more down at 90. Those are the places where I would be getting excited about nibbling long or for a snapback. Price rejector at the top of this rotation. You can see the liquidity, it can be, the liquidity can be really misleading overnight also. Sometimes, you'll see a lot of it stacking up and then they just all move out of the way suddenly like that. They just did it. See right there? So the white is thicker liquidity and it got really dark there for a second and further down now. So everyone just literally pulled out of the way. They pulled down to at least here. Not everybody, but a large amount because it was whiter before. So the liquidity is pulling. You can see that's why this is mostly red here. There's little bursts of blue. That's on the stacking side. Like right now, it's stacking back up. So that's what we're seeing here. Oh, are you on the in Florida, Peter? Where is I know the hurricanes in well most of the Cocoa, but wow, well, good for you that it passed by. I heard it was quite a storm surge. So hopefully no damage and whatnot. That's good news. Okay, well, this is still pushing down and the liquidity is still thinning out. So we'll give it a few more minutes, see if we get any other folks joining us, and then I've got some just background material on trading this time of day and night that I want to talk about, and then we'll look for some trades. This could be a long, but it's a better long if it goes lower because there's just no excess here at all. And it's also important to see where we're trading here. We have a poor week low, which is this right here. And then, just back to the low of yesterday is all the way down 57.80, slightly below that. So it's always useful to look for artifacts like that it might trade toward. Let's see, we had SD up. Let's put SD back up. That's not going to tell us anything. Yeah, let's sit on this footprint for a minute. So there's not UB down there, but it's a poor week low. There's just no exhaustion excess. It just stops. Those tend to get completed, but maybe not right now. Hey, Donna, come on in. We're just getting started. Some good action tonight. I'm going to do a little bit of do's and don'ts and overnight stuff in a few minutes. Right now, we're just kind of letting people drift in. And France has some numbers coming in about 10 minutes. And this is the French inflation rate. And believe it or not, that could move us around. Why do I say believe it or not? Because remember, everything that happens in our futures, in the equity index futures in the United States right now, the equities aren't trading. So everything here is speculation on a speculation that's the result of whatever's happening in Europe or Asia. And things happen there, those economies, economic releases, and our futures say, oh, that's interesting, and try to speculate on how it will impact our markets when we open. So that's why it's such an interesting time of day, because it's unique. We are a derivative of something that's not trading right now. So the value of the thing we are derived from is an unknown. You need to wrap your brain around that to trade well overnight. People look at historic levels a little too hard overnight. And it often will blow through a level with a lot of momentum and then just turn right around after it goes through it by a little bit. And that's because of the nature of the liquidity. It's very thin at night. Although tonight's decent, interestingly enough, there's decent liquidity pretty thick below us here. And now, look at that. See, since I started talking, remember we first started, I said, okay, there's lots of liquidity at the low. And then everybody moved out of the way. It got darker here. And now you can see they're coming back up. As the price moves up, there's more liquidity building again. So this is going to be very interesting. It really needs to take this low out. And then, longs down here get very interesting on the quarter numbers. That could be a spot we could bounce. So if we get a sudden stops run through here, that could be an interesting place to play. But you gotta have something logical to do it with. You can't just flip a coin and say, "Oh, here looks good." So what is a logical spot? Well, the quarter numbers are a good place to start. So we're on one right now, 97 and a half. We just traded down to 96. So the 95 quarter number is the closest one, and there is liquidity there. So that's the earliest place I would play. And then further down, 92.5 obviously is the next number down. And then around 90. And in this case, there's liquidity right above 92.5. Up at 93.75, it's a little thinner. But let's see if we can get into a long just for tick scalps here. If you're going to do this, you got to go for ticks, and you got to be prepared to scale a little bit if it overshoots. So 96 quarters, the current low, or 96 rather. So if it overshot that by a full point, that this would trade and maybe fill. And that it generally won't overshoot that far unless there's a lot of volume. And if it does, it'll get to the next one. So these two are definitely in play. And so probably want to see what happens with those two. And then this one, if all three of these were to fill, I'd be in a decent spot. I'd have an average like in here. That would be okay given the shape of this profile, as long as it wasn't some sort of news that we really started selling off hard on. And remember, we have a number coming that's fairly important in the scheme of things tonight. So, if they were able to push this poor weak low, certainly the 80s are in play, and I would be in this way too early. So could you play the other way? Yes, you could play the other way also. That would be an alternative way to do it. And how would you do that? Well, you'd want to be getting short up here somewhere on your way to that ledge. So it got sold pretty hard right here, and we're below that. See this delta right on the bottom of values. So that's about the earliest you'd want to try it, somewhere right in there. And that could be dangerous to try to short. It could, anything perceived as good news, and we're going to be 8-10 points above that. So those are the ideas that are both valid right now. And remember, I say over and over again, but I'll say it again because it's important. An inflection point like this, you can trade both ways. You can always do that. So the first thing I do is what I just did, particularly in the overnight, because you want to be really clear on where you're right and wrong and where you can afford to play based on the risk. So what you want to do is really, really dial in on where the liquidity is and how far of a movement would that be and how much have we moved around. So relative to it, how much is it and what's the structural situation there? You kind of pull all that together, and you need to just, to boil that down to an opinion. And right now, if I looked at just the wave volume and I said to myself, which way is more aggressive? Well, clearly the downside's more aggressive. So playing this short makes some sense. Again, if you got a good entry, which would be anywhere from 2.5 down. So that's probably the easier direction to go, but that doesn't mean it's an easier trade because you still have to get filled somewhere. So rather than parking limit orders, what I would be inclined to do in this condition is if it gets to one of the spots I just staked out, and I just staked them all out really clearly. You can also mark them if you want, in Jigsaw, you can do that. Most platforms, there's a way to make notes. So instead of like putting orders there, I could just mark the spots I'm watching, put X's there or something like that. But anyway, the idea is to just be ready to go. Now you could go with a break of this ledge. It looks like it's about to break it, and we wouldn't have gotten filled up here because we haven't bounced. We have a price rejector on the beginning of this period. So, you could just get short here and say, oh, it's probably going to go. Let's just get short. All right. Can you get 3-4 ticks real fast? Probably more if it does go, but let's just see if we can get 3 ticks. That might clean up the poor weak low all by itself. And then the liquidity is just below that. But I don't want to get a real big long going here. because I mean, get a real big short going, because I'd really much rather be short further up. So if I can just prove the case that it's more aggressive to the downside, I'm willing to kind of try it. So this is what I do. I kind of nibble in and out around the spot just to see how hard it is to fill, and and to position myself for a move. And then the alternative is to wait for it and react to it really quickly. So in this case, we're already in this short. We might make, a couple of ticks here, which is fine. I'm not trying to show how much, I'm showing technique. You could scale this as many contracts as you wanted. Okay, it's starting to go here. So again, this is just kind of a probe to see how hard it will be to make a short trade work. And then maybe scale it there a little bit. That's where it broke down from, or that's where it got sold the hardest. Hasn't broken down yet. All right, so we just made a couple of ticks there. Still haven't cleaned up that poor weak low. So again, this is one of these conditions. You can trade inside out, which is what I'm doing here with this short, but you're just better off doing it from further inside if you're going to try that. Like the last price rejector would have been a sweet spot up here at 07, but we weren't running the session yet. So that was when all this aggression started, this recent burst. That was this. So this could be the end of it, and being short might be the exact wrong answer here. So, I'm kind of trying to see, again, just if it's going to take this ledge out hard to the downside, it's probably going to do it on this news, which is in 3 or 4 minutes. And if it's going to go up, it's probably going to do it on the news, which, would get me pretty far off sides. So let's just kind of watch and see what happens here. It's a little too, this is not a good setup because we're not cleanly going one way or the other. So if you're going to play it, you have to kind of pick a direction. And I picked down just because of the poor weak low. And it could end up being a really good short trade, but if it just burped through there and went 3 ticks, I'd take the 3 tick profit, because that would be educational to see what it did after that anyway. You can see that the range, if this energy continues, the range should go a lot lower. And remember what I just showed you on the TPO view, the overnight low. I mean, the previous session low from yesterday is pretty far down, 80. You don't have internals to work with when you're trading overnight because the equities aren't trading again. So, the only thing you have is the pure price action. So what's the volume doing right now? Let's have a look at that. This big move down was about 2K and it got 31 ticks. It bounced on a third of that, 15 ticks. Half the ticks on a third of the volume. Then it went a little bit lower. The volume got a little weaker. Then a roughly equivalent bounce. So that really didn't do anything. And now it's trying to push down lower. So if this volume goes up, it's the short will plan out. But again, ebb and flow at the low here. This could end up being a really good long, not a short. My guess is the short. Like I said, there's always, you can play both ways. There's always one direction that's going to be easier. And at the moment, this feels right to me. I'm not sure why, but I tend to go with that instinct. Probably because of the poor weak low and the price rejector. And now we have UB on the pullback and a price rejector on this one. So we should be able to get some downside here. And I might even move that order down a little bit if it gets going fast. Down to maybe here. Let's do that. If this is going to go, it's at least going to get there. Okay, here we go. Now it's starting to. So there's our quarter. 96, 95 quarters. That'll be 5 ticks. That'll be a nice little quick profit if it does break down. It's trying. The volume's picking up, but we're not going down. This is the kind of time I like to reset the faster column, the current trades, and just watch the battle and see if it feels like the battle's going my way or not. So like right now, we're trading on the ask. That's good. Absorbing the people buying down here. We want to see some more energy to the downside, though. Let's see what the liquidity is doing below us. Some right down there, right above me. Otherwise, they've moved out of the way more or less in here. So again, you can see the setup and you can see where it works and it doesn't. And but the thing you have to get used to if you're going to play overnight, I'm going to let that one fill if it gets up there. The thing you have to get used to, and this is a big aggression over there in NQ. Okay, we got those numbers out of France. That's what that was. And we had a quick knee-jerk reaction that didn't really do much in ES. It moved around a little more over here. Let's see what happens next. Anyway, what I was starting to say is if you're going to trade overnights this time of day, you have to get used to the fact that there's no other way to describe it. Trades happen sort of in slow motion relative to what regular trading hours are like. So you have to get used to that. It's a different pace. For me, it's hard because I like trades to go very quickly. And, good trades work right away. And at night, sometimes they do, but sometimes a good idea takes a little time. And so it's a different vibe, if you will. And you can see ebb and flow at the low. We're right on the low. So, I mean, again, this should work, but yeah, the odds are thinking in bets. The odds are that I will make money with this trade. But then the next question is always, is it worth taking the risk here? Yeah, this is worth doing. Okay, there it goes. We just had 3 ticks. There's almost 4 ticks. I might just jump up and take 3 ticks here. Okay, I can get 3 right there. Let's see how hard that is to fill that 3 tick profit. Again, I do this just because it helps me get comfortable with the rhythm. And I was doing some trades earlier. This is the first one I've done since we started the class session. So looks like that one's going to fill, and it did. Okay, so that worked. And we're cleaning this up, but it's not a better low yet. We're trading into the liquidity. So trading toward that break was a good idea. And that kind of reasserts my idea. If we could get short on one of these pushes up, that's probably good. So, up in here, whoops, wrong side. I'd probably look to sell it unless conditions felt like they changed dramatically, which right now it feels like we're getting a little more momentum to the downside. You can see the books flipping over a little more. They're getting out of the way. So I probably could have got a little more out of this than I took. And it may end up going all the way down to 80. The trick if you're going to trade overnight is in ES particularly, and I like to generally play ES. If I'm going to trade NQ, I like a more orderly environment. So trading ES, MES and blocks is my favorite way to do this time of day. But you have to be really careful how you scale it if you do it at all because of the slow motion kind of molasses behavior, and also because the thin liquidity. It's a different scaling mentality. There's times I'll get really aggressive, and there's times I'll be really light in size, and it depends. It's one of those it depends situations. There's not a hard set of rules, and here's how you do it that I can give you for this. It's much more. The simplest way to describe it is if you just constantly stay in the now when you're trading overnight. And also understand you're going to get more slippage, particularly if you try to trade NQ. The NQ can skip price levels a lot at the overnight. Like if you look right now, there's gaps in the liquidity where there's no orders, no bid, no ask. And so you can go a lot of price levels over there overnight. But if there's a really high momentum move, you're better off in NQ as usual. It's always a better one to play when there's momentum. But under these kinds of conditions where it's kind of quiet, you want to scout for ticks, but you don't want to do it huge size because you can get sudden bursts of momentum like we just saw. So we cleared the French numbers. I don't think there's anything else coming tonight. So again, that's the other thing about trading overnight. You never really know if you're going to have a session that's busy or not. It's not like every RTH, every regular trading hour is open is busy. Not every overnight is busy. That's the thing. So, okay, there's the French numbers. We just got those. And then in about an hour, we've got German unemployment. That's our next thing that's going to hit. And we're still pushing down a little bit. So it's still a short, but the hard one to stay in. Bounces probably are shortable if they don't get any upside traction. Hmm. There we go. There's 95. So we made the quarter number at 95. We found buyers. See, here's a little spike. This is how it'll trade. See, it traded right there to that quarter number, and then we immediately bounced almost 4 ticks. If you count the one down, we did bounce 4 ticks. So you have to respect the quarter numbers for whatever reason it is. ES loves that. I used to see that in the pit. It's been doing it on electronics for 30 years. I don't know why that is exactly. There's human nature things about breaking things into chunks. Quarters are chunks. But for whatever reason it is, ES really likes to trade around quarter numbers. Yeah, the liquidity looks lopsided, but again, you really don't know what people are thinking. A lot of times there's a lot of spoofing with big liquidity overnight, and technically, spoofing is against the rules, but only if you're spoofing. If you're putting up an order and then you change your mind, you're not spoofing. So the definition is putting up an order that you don't intend to trade, and you'll see a little bit of that at night where, there'll be big orders that, suddenly appear and disappear and move around trying to influence. I think most the impact of that is less than it used to be. I think most people don't react to that. And now that you can see traded volume, it doesn't really make as much difference. This is a really interesting spot right here. We just cleaned up the 4-week lows. So now the structurally, we don't have a price rejector, but the bottom is at least in place here. This is a definable bottom. It's not. It's got UB and a price rejector above it, so it's no longer poor weak. It's unfinished. So that's interesting. And then the price rejector right up here. If you could get short where you see my orders, if one could get short where you see those orders, that's a very interesting idea. I don't know if I would scale it much beyond what you see there. I've got 3 chunks of 5. And I'm doing it all below. It's right at the bottom of value and all below 0 is the idea there. Above the 97.5 quarter number, but below 0. So you could argue it would be smarter to spread that out a bit like this, maybe. So that's right on the bottom value. That's right in front of it. So probably want to put that like up here, right under 0, 0. So this whole chunk of volume, this is a really good example right now. Let me illustrate this a little bit. The value area low is right here right now, and there's a chunk of volume that's kind of right here. So these orders kind of represent selling into that chunk of volume and the value area low. And this little air pocket right here represents a risk because it could easily pop up through that and come back down because there was much more action, up here and the VWAP's up there. So that's the risk in the volume right now. If I get filled here, I could end up getting swept up into that low volume node. And low volume can be risky. The bottom line on low volume is it just tends to go through it fast. And, it's unpredictable. That's the best way to describe it. So let's watch. And that's what you always want to do when you're getting to a spot like this. Some people just get nervous and they'll cancel their orders, or some people will just say, no, I'm right. And they'll get aggressive and they'll stay aggressive. And the right answer is neither of those. The answer is to watch the price action, watch the traded volume and let it tell you what's happening. This was pretty good buying right here, but guess what? That is a price rejector. I mean, it is an unfinished business. That wasn't balanced at the low. So, this could be the re-entry short right here. God, I keep doing that. I just got long by mistake. All right, I didn't want to do that. Let's see if I can scalp out of my long. I clicked on the wrong side. Hazards of trading overnight. And now I'm going to be pig-headed and not try to take it off scratch, try to get a tick. I do silly things like that. That's probably stupid. Let's just try to get it off flat. Now watch, the bottom will fall out and I'll be long instead of short. Yeah, that's probably going to happen. Oh, do I want to take a tick loss? Yes. Okay. Yeah, that was just an error. When you make a mistake, it's best to just get flat. I have this thing where I don't like to take a little baby loser, even if I didn't intend to do it, but I've learned to just not be silly that way. You learn a lot about yourself when you're a trader. You really do. I mean, that's my perfectionism, and I don't want to be wrongness. And, you have no one to answer to when you're trading but yourself either. So, you can't, you have to learn not to listen to your own bullshit. And that takes some work. Not everybody can do that. Not everybody can, is willing to get in their own shit and dissect it. But it's really important if you're going to be good at trading. Okay, it's trying to bounce. You know what? I don't like the idea of this short anymore. Even though there's UB down there, this is way too aggressive. I'm going to cancel those orders. If that wasn't UB there, I'd say this was a real nice low. So again, structure is just context. UB is structure. So let's not get too ambitious about that idea. There are some overnight sessions, midnight oil sessions like this, where it's really, really volatile because there's a lot going on in Europe and Asia. Obviously, tonight's not one of those. Those can be fun to trade. You don't always know when they're coming. You sometimes do, if it's based on economic announcements, but sometimes it isn't. Sometimes it's European earnings or news that hits. So that's the one thing about trading this time of day routinely, is it's very hard to predict how much energy you're going to get out of it. And it's hard when it's quiet to scalp with size like you can do during regular trading, because the liquidity is so thin. You put on size and then a sudden move comes and you can really be off size. And by the way, that's much worse in gold and oil. I said I would talk about those a little bit. This time of day, gold and oil are very interesting trades also. They tend to both be volatile around this time. I haven't traded either of them recently, but I used to trade both of them fairly aggressively, and a year and a half ago, a year ago. The thing you've got to watch out for, and this is an important distinction. If you're trading the equity index futures, the equity index futures are a derivative of the equities, which aren't trading. So as I said earlier, this is all speculation of what the reaction will be in our equities to whatever's happening now. That's what we're seeing in the price of the equity index futures. Okay, oil, that's not the case. Oil is a commodity. Oil has a fundamental value. There's people need oil for their jet planes and for their ships. And so the oil market, like any other true commodity that isn't just a derivative like we are in the equity index futures, any pure commodity like oil, there's always going to be a fundamental side to the trading, and it can be very misleading in the price action. So, for example, if you watch oil, number one, can move 15% in one day when it wants to. I mean, some of the moves are just crazy. While we're waiting for action here, I'm going to just do a audible. Let's throw this up, and let's just put oil up over here on the far right instead of CL, and we'll just talk about it and watch it while we're talking about it. So I don't think I'll trade it, but we can if we want to. Oh, CL, where are you? There we are. Okay, so that's oil, and let's maximize it. Oh, let's see. And come on, why isn't that working? There we go. It's just throttling the maximize. So, okay. Let's switch it to 1 minute. Okay, so this is oil right now since it reopened. This is what I mean. Look at some of the big sudden moves you can get. We had one back here about 3 hours ago, 3 hours ago. So here's the thing you got to remember. If, let's say an airline, decides they need to lock in their fuel costs for Christmas. They could come into the oil futures market and buy a bunch of oil futures because that would lock in the price of oil, therefore their jet fuel, and that would make it easier to run their business. So something like that can happen, and it can happen really suddenly. And I'm going to put some more days up here. So you can end up with these really crazy big moves. So look at this. Here's so here was a little tight range a couple of days ago, Monday last week, and Monday the beginning of this week, and this was value right here. Look at that. This was value for a day and a half to right here, and then for whatever reason, it might have been inventory or whatever, right there at that point, we went from 71.27, call it, all the way down here to 69. That would be a $2,000 move in one contract of oil. And so if you get into these directional moves, it often goes directionally or trends quite well. So that's one of the nice things about it. See the same thing here. Here's a real strong buy move that started at the bottom of that sell move and then went through the close and then continued. So again, you can catch these really long trending moves, but you've got to be really mindful of the levels and the energy in it, because again, somebody comes into the market with a specific purpose, like hedging their fuel costs for Christmas. When they leave the market, whatever disruption they cause has to resolve. And that's literally what you see right there. That's a perfect example of it. Somebody came in here and started selling really aggressively. So that disrupted the price. Everybody that was buying, get out of the way. I can buy lower. This guy's selling aggressively. And then when that stopped, or they stopped, that when that energy stopped, the buyers came back in and we got right back to value pretty quickly. See, this was value here. And then we stretch the other way, and then we more or less end up right back on the same spot of value. And this is the nature of the true commodities. They tend to do this a lot. So oil, gold are both examples. Real quickly, we could look at gold here. It's been a weird trade because it's been trending up so strongly, which when markets are behaving really silly like that, I generally stay away from them. That's just one of my things. But again, you can see similar moves in gold. Like here's one right here. So if you're going to trade this time of day, oil and gold are definitely worth watching, but understand the fundamental problem. That it's not all speculative based on the value of the thing we're derived from, because we're not derived from something. This is a true commodity. In the case of oil, the other thing you have to understand is OPEC and the other producers, there's monopolies and cartels involved. So there's a lot of price manipulation in the form of supply and demand manipulation. And again, that can make a geopolitical event, let me put it this way, a geopolitical event that has a supply crunch at the same time, often intentional, can spike the price a lot. I mean, crazy amounts. I remember 2008, 9, there was a trade Oil went from 25 to 150 and then back down to 50 over the course of like 18 months. It was just crazy. And it was a lot of it was related to the Great Recession, but there was also, games being played. Let's see, I see a comment. Right click. I'm not sure what that means. Anyway, so important thing specifically for oil and gold. Again, gold, not so much a commodity that, it is an actual thing, but people don't consume it as much. There are some industrial uses of gold and whatnot, but more so with oil, keep that in mind that it's not just about the price action. There is fundamentals. There are fundamentals there too, and that makes it very different than the equity index futures. Oops, now I have two of these. Let's get rid of one of them. I duplicated my window to do that. Yeah. So, RTY, where art thou? Okay. Oh, yeah. Yeah, it was just, I knew what menu it was, but it was lagging. That Zoom throttled some of the Windows stuff. I kept clicking on, nothing was happening, and then it happened like 3 times in a row. That's why I was struggling with that. So look where we bounced to. This is exactly why the short would have been so dangerous down there. We bounced all the way back up to zero. Now it's actually a decent short right here. If it's going to reassert down, this is the place it would do it. So you could try it right here. Again, we're right on that air pocket. This is the top of value. So if it's going to try to go down, this is where it should do it from. But the moment it's going up, how about that? So again, see how fast you can get off sides? Now we're right on value. So I could either just get out of the way here, or I could scale it a little bit and try to catch a pullback. Both of those are bad ideas. Let's double it real fast and just see if there's if this is a stops run up here, then selling into it makes sense. If it's not, okay, zero print probably is. But again, if you're going to do this, you got to scale it really hard, and that's really risky at this time of day. But I'm going to just show you an example really fast. So I just scaled it up to 60 micros because we hit the VWAP. Again, if it doesn't find sellers there, then that wasn't a little short squeeze. That truly was some initiative buying. I don't think it is, but there is UB up there now. There's UB at both ends of this rotation, there and at the bottom of the session. So let's see if we can make this work. By scaling that, I'm not off sides anymore, but I'm also taking a lot more risk because I now have effectively a 6 lot of minis. But now my break even is right here. So basically, that was a response to that stops run, that if it continues to run against me, I'm really going to get reamed. But if I called that right, then it's going to start taking profits like it's doing right now. See, that's the difference between the retail trader. That we need to take more of this off here. 35. Let's okay, 25. Let's just boom. I'll keep 5. And we'll put a buy stop there. Okay, anyway, this air pocket, remember I said if we got above that value, we'd likely see a quick stops run through that air pocket. That's exactly what happened. And, again, if I just kept the first 5 or 10 that I put on, I would have had to take $100 loss to get out of the way there. Instead, I scaled it by 6 times, 600%, but it instantly worked because, again, I saw the stops run and I decided to go with it. And now I've got the runner down. This would have been a perfect setup to get faked out of your short because that's so clearly what was happening there. I'm going to try to show you how I could see that. I saw it in the traded volume here. You can see it on the 30-minute, but not very clearly. There was briefly a zero print there. But look at the price action here. If you go to 1 minute real quick, this is a 1 minute footprint. And you'll see what they did there. It was very clever. Come on. Zoom's throttling me yet again. Okay. 1 minute's a lot of data for this particular chart, so give it a second to load. Maybe I should have done, all right, there we go. Should have done 2 minutes. All right, you can see it here. This was the move that was going on, and then it started to get sold, and then right there, that was the little let's squeeze the shorts, run stops through that old supply, and then boom, right back to where we were. Just you can see that pattern over and over again. And let's go in a little bit. So this is 1 minute. Let's look at 5. I think it just hung. Oh, damn it. It doesn't do this when I'm not doing Zoom. There we go. Did it get my construction to go to 5? All right, hang on a second. I'm going to pause my share. That always fixes this problem. Oh, zoom. You're an evil. Okay. Now, it's just looping. No, come on. All right, I'll just restart Sierra chart. That's always the easy way to solve this problem. Luckily, it restarts quickly. All right. Okay. Now, let's put this back. Yeah, you can really see it clearly right here, too. That's what I was just trying to show you, where they ran the stops right there and then just right back down. That's just such classic behavior. And it always happens, it frequently happens around these low volume nodes. That's why I watch for low volume nodes. They always create risk, but they also create opportunity if you know what you're looking for. And that's what this comment is about. Where I show this all the time, but I like to connect the dots. When I talk about high volume and low volume nodes, that's what I'm talking about. Low volume nodes likely to be traded through. That's what we're seeing. And that, in fact, just happened. So, okay, let's put the footy back up. That over there, too. Okay. So, this is actually turning out to be reasonably productive in the short term. I didn't think I'd get to show you one of those that quickly, and that was perfect because it was both the retracement for the short and the stops run, and now it's back up here again. And at this point, I wouldn't try that again because we've kind of reestablished value here, by retesting that spot a couple of times. What's the easiest direction to go right now? Probably back through that air pocket toward the VWAP again. So it's important to get a sense of the rhythm. That's a key part of this. And every night it's different, but it's always slower at night than it is during the day. So I recommend just leaving a screen like this up that you can watch and doing other stuff. And then when you see a sudden burst of action, you can jump in and, I can trade that. Or if it's directional, if the market's trending, or if you're trading oil and oil's trending, that's the kind of thing where you want to put a trade on and let it work. But it can take a lot of time. The other thing I want to mention with respect to oil and gold, it's not as true lately, but it's still true sometimes, particularly in micro gold. The micros in the equity index futures have plenty of liquidity. So you won't get trapped in a low liquidity environment that's impossible to trade. That has happened to me in micro gold in the past, not recently because I haven't traded it. But so if you're going to trade gold, I'd stay with GC. And not the micro version of that contract. That, and again, it might have improved, but what happened a couple of times to me, this is like a year and a half ago, and it's just worth being aware of. Um, there would be a good spot to trade, and I would have a position on, and I'd be watching the data for the minis, which you should always do, but trading the micros because I was trying to lower risk a little bit and scale a little bit. And all of a sudden, there'll be a really big move, and the liquidity in the micros just disappeared. So all of a sudden, there was like a 10-point gap between the bid and the ask. And just in the micro, the mini was fine. And they alleviated that problem by paying people to put up liquidity in some of the other contracts, like they have in the MES and MNQ. They're paid liquidity providers. And they did that in CL as well. I believe they did it in oil or in gold, but I don't know what the result. I don't know if they've got that under control. So I just remember not last summer, but the summer before, I had a couple of overnights where, I dropped $1,000 or $1,500 on one trade because of that specific situation. And it really burned me because I was watching the data in the mini, and it should have been fine. The trade should have worked fine, but because it was in the micro and there was no liquidity, I got way stretched out of it and stopped out of it. So be aware of that. And that can happen in any thin liquidity contract, but the micros and some of the other contracts besides the equities can get really thin, particularly off hours. So just be aware of that. All right. Well, I think what we'll do here is we'll go we'll certainly through the bottom of the hour and maybe to the top of the next hour. I don't know yet. We might take a break first. That's the thing with this time of day. Action comes when it comes, and we're getting past midnight, but we're not far enough yet that, if there were any earnings, those would be coming up in a couple hours, but there's not much of importance there today. If there was economic stuff in the US, it would be coming up in a few hours also. Most of the European stuff that we would normally get, we would get around now, in the next hour, certainly. Looks like there's a talking head at the ECB at 1:15, so about an hour from now. And some other numbers a little bit later, but this is USA stuff, and that will get us bouncing around when we get to our regular trading hours pre-open. So, tell you what, I'm going to take a little break right now. I'm debating whether I'm going to have more coffee and get more awake or just walk the stairs and get a little more energy. I'm trying to decide if it's worth waking up for this, if we're going to get more setups. If it just gets really slow right here around zero, it's going to be very hard to trade. It's not liquid enough to scale it big. It's not directional enough. There's no dominant energy right now. See, that was clearly a spot we could play long or short. That short I just did was nice, but unless it pushes away for one reason or another, we're not going to get another opportunity to do that. So, and I don't want to just keep the session running to keep it running. So, tell you what, let's take a break for about 5 minutes and 10 minutes to the bottom of the hour at the latest, and see if we get any more momentum. If there is any sudden energy, I will be here. I'm not going away. I'm just gonna mute myself and think about some coffee. So I'm gonna put up my little muted thing. Resume about 12:30 or earlier is the plan. So I'll stick that there. It's currently 12:19, and like I said, I'll mute myself, but as soon as there's something happening, if something does, I will talk. So you could just leave me on at your end if you want to monitor it. The one thing I like about what's going on right now, let me make sure I mention this, because at this time of night I have to make sure I tell you what's in my head. What I'm seeing here, that we have UB at the low, and we have UB on both sides of the current bar. This is the current bar, and UB's on both sides of the pullback of the current bar. So basically, there's a very interesting range trying to break both ways here. And so that's why, a short toward the bottom was a good idea. If it gets going across this low volume node here, back above value, then it's either a really good short or it's going to become a long and it's going to go push the other way. So there's opportunities here because of that lack of absorption and exhaustion at either end. But if it's not there, playing it's going to be tricky. Playing towards something at nighttime is hard. It's better to either react to events like that short squeeze we just got, or that stops run rather that we just got that I scaled into. That's the kind of thing you want to teach yourself to react to things. And as I'm saying this, it's moving down. So we may get a long here to play. This low is very interesting because the yesterday low is so much further down. This looks like a long down here, and it may very well be once that UB cleans up. But if it gets going at all with any sort of momentum, it could easily get down to 80, and that's a clean 20-point drop from here. So you really got to be mindful of the momentum, which is now going down again. So as I said, I'm going to take a break. I'm not taking, this is what happens overnight. I'm going to go get something to eat, or whatever. And the minute you start to do it, the action picks up again. All right, I think it's pausing. I'll be right back, or by 12:30, I'll be back now, 9 minutes from now. Another thing I wanted to mention is if you're going to play overnight, play ES or NQ or YM. And the indexes tend to be remarkably correlated overnight. You rarely see a huge divergence because, again, we're speculating on, the big picture anyway. So there's not going to be any specific instrument behavior. Now, as it gets toward the open, that will change. But this time of the night, the patterns look almost identical. And generally, ES and NQ are the best ones to play, but occasionally RTY and YM will be a little less erratic. Ooh, we just got a big push down. Here we go. All right, so much for our break. See, energy just comes out of nowhere. And it just did that, just big sweep down. And so let's reset the volume and see if there's a long or a short here. My initial instinct is to try to buy a breakdown of this down to 92. Fairly aggressively. That's my first instinct. But if it runs me over, I would get out of the way. I would not try to scale this aggressively. So it would have to hold 90, in other words. That's as aggressive as I'd get here. So let's see if this works for a quick long scalp. There's never, remember, important point. Any inflection point can be traded both ways. There's usually a direction that's easier, and you want to look at the dominant energy. And the dominant energy right now is clearly down. So this looks like an interesting short and a long. I like the idea of a long after it breaks because that's the typical thing. They'll run the stops down here and then the buyers will step up. But if they don't, I'm going to end up pretty far offside. So let's see what happens. I like the liquidity down here. It's pretty strong. Structurally, we should test this area. There's old demand right here. That's what that green bar is. That's demand from previous bars back here. So how much for taking a break? Every time I see the second I was about to see what it did, right when I was taking that break, it did this sharp move down into liquidity. It got bought. That's what I'm trying to get long into, is another one of those. The sharp moves are where money. You can see where to do it. You just have to be relentlessly patient and also prepared to be wrong quickly or scale quickly. You just and then the right answer to that question will become fairly obvious when you've done this for a while. Somebody posted, one of the people in this class, I don't think they're here right now, but somebody posted, they asked me this on the board in the pit. God, maybe 6 months ago, where I post like scalping this morning, that stream, I always post trades there. Somebody posted, how come you only post your winners? And I was like, well, because I don't have that many losers. I mean, I post all the trades when I post, I don't filter them. So it just I tend to have winners, and if I have a loser, I tend to be able to make it work into a winner one way or another. And then occasionally I have losers. Sometimes they're big, but they're not life ending. They're not account threatening. That's the key to this game. You have to play for the long term. This is a long game, and I don't know about you, but I'm not a long game player. I'm a much better get in, get out. You know, that scalping mentality. So kind of combining the long game mentality and scalping, you have to be a long game risk manager and a short term scalper. And that's the sweet spot. Boy, look at that long into that liquid. That was just such a perfect reversal right there. I mean, it just doesn't get clearer than that. What'd the volume look like on that little move? So this one was 634, 1.8, 300, 600, 600, 1.3, 900, 300. That's why right there, weak push down on low volume. See that was your clue that's going to be a rip the teeth out long right there. Did the same thing back here. So that's the key thing to look for. Wave volume will tell you the story. What percentage of an account do I consider a threatening loss? Ooh, that's a really good question. The standard risk management, is you should never risk more than a couple percent of your account on any one trade. And that's all true. If you have an extended drawdown and you don't do that, it's really hard to come back from an extended drawdown. Having said that, it really depends a lot on the type of account I have and the trading I'm doing in that account. I did a thing with the TRG workshop before we started TRG, we had this workshop, and at the end of the workshop, I put $2,000 in an account and I started trading it with micros to show that you could start with a fairly small amount and trade fairly aggressively. And there were trade. We took that $2,000 up to like $5,000 over the course of 2 months. I was showing examples every day of, here's little trades you can do, and I was generally trading at the most 10 micros there, and so that's basically a mini in ES, and so if I'm taking risk of $50 a point, which is what a mini was, and this was a $2,000 account, you look at the percentage from that point of view. How much margin did you have to put up? Well, $500 for a mini. So, theoretically, I could put up 4 minis with the $2,000. So the problem with this question is this right here. It's what are you using as the basis for your investment? You're looking for a return on your investment. What is the basis? Are you using the leverage or not? Because the full margin, oh, I didn't get filled. Look at that. We had a sweep down right to where I was. It's missed by a tick. That's too funny. Look at that. It swept right to me. Anyway, so that's the problem with that question. So what percentage? You have to think in terms of your cash balance. So, if I have a $2,000 account, am I willing to risk $200 on a trade? Yeah, that's 10% though. That's too much in traditional risk management. But because of the leverage, if I do that at the right spot, that makes sense. But it would be better if I could do it with less risk. So, for example, this morning, I don't know if you saw it when we did the Trading the Open, I had a 2-lot micro MNQ that was like $175 profit. And I caught a good runner and it worked right away. And I was able to manage risk without, taking any more risk. And I didn't scale it either way. I just went in with 2 and I kept them. And I'd much rather make $170 that way than, working into 5 minis and going for 2 or 3 ticks because the risk, if that goes against me, is so much more substantial. So the problem with your question is that it's a complex answer. It's a great question. There isn't a simple percentage that makes sense. The standard, don't risk more than a couple percent of your capital is true, but that's more of an investing model than it is. The game we play is high risk, high reward, high leverage. So if you're not taking advantage of the leverage, why are you here? On the other hand, if the leverage works against you, you won't be here very long. So it's a complicated question. I like to look at it just in instances. Like, if I'm trading a small cash account, I try to just trade with a couple of micros. If I'm trading a bigger account, and I'm not talking about evaluator accounts. I'm talking about real money. If you have real, $10,000 in an account or a real $20,000 cash in an account, how much risk would you take? Well, with a $10,000 account, I'd trade up to 10 minis in that. And, that's a big percentage of capital, depending on what exactly you're doing with it. If you're doing that and you're scalping for 2 ticks with 3 ticks of risk, then you're not taking a lot of risk. But if you're doing that and, you get way off sides, then that's a problem. I find that the volatility of my equity curve in futures is very different than a standard risk model. So it's very often, if a position really goes against me, it might cost me a bigger chunk of my account than I should have risked. But because I have a really high win rate, that the odds of that happening are really, really low. So I take that into account. If the style of trading that I did had a much lower win rate, like if I was an intraday swing trader with I know traders that have 40% win rates, but their winners are 5 times their losers on average, and those guys make a lot of money. Would that guy be wise to, taking a big percentage of his account? No, not at all, because he's got to make that move work. So you have to kind of have thought that out well in advance. And they're just different styles of trading. I think a really good way to start is to throw $1,000 or $2,000 in a cash account and trade a couple of micros. And on any given trade, you shouldn't lose more than $100, $150. That'll never be catastrophic on $2,000 in one day. If you do it 10 days in a row, it starts to get closer to catastrophic. But and that can happen. You can be a good trader and have a 10-day in a row drawdown. 10 bad days. 10 every day. It happens. So controlling that is really important. And I wish there's a really good answer I could give you that was like, A plus B equals C, but it's just not the case. Here we go. I might get filled here again. Let's see. There's no tick to look at, so we don't know how aggressive the selling is, other than I was right on the sweet spot. Let's move up a tick, just because I missed by a tick last time. So now I got filled. Okay, this time I got filled. I wouldn't have if I hadn't have done that. So can we get a quick 4 ticks, quick point? Let's see. Otherwise, let's try to scale this a little bit. It looks like there's buyers here. Certainly an inflection point. You can see it happening right now. So this one's worth scaling. It's perfect because it's not getting sold too hard. As long as the bottom doesn't fall out here, perfect. Okay, now I can scale it a little bit. We'll try to get 3 ticks and what'll be 6 ticks. It'll be 3 and 5. I'm sorry if these two both fill. Ooh, see that little stops run down? They're probing down. They're pushing down to see how far they can push it down. This is perfect. Watch that energy. It will turn fast. They'll push down and then they'll buy their own push down, pushing into their own liquidity. You see this all the time at night. The aggressive traders will sell to buy and buy to sell. That's what's happening right now. You can see it. So you want to try to get filled here. But again, you can't get too aggressive because if the bottom really goes, we're screwed and we don't know if that might happen. So big aggression. This would have been a nice short. It's building a nice tail, but I like it as a long. I'm not afraid to scale this one because the buyers are coming in. I love it. All right. Really good inflection point here. Let's work this inflection point. We're not getting far off sides by scaling slowly. So as long as it doesn't just rip the low out, I'm in good shape. If it does, then I can end up pretty far off sides pretty fast. But so far, I don't think that's happening. I see buyers in there. I see the stacking on the bid. Again, one good sweep up, we start taking some profits, and then we'll see how far we can go. Even if we just get back to the bottom of value, this is a sweet trade. Here it comes. Okay, guys, come on. Come get me. Took a little profit there. I'm being conservative because I don't want to get trapped in this long here. But we traded the liquidity, so the buyers so far defended this. Now let's see if they hold it. Okay, right at the bottom of the range as well. There we go, taking profits. Beautiful, beautiful. Now we got a 5 lot left. We've got $200, $175 locked in. Kill these. And now we'll just let the trade go. All right, there's value. That was the first target. Let's get under it. 95 is where we started looking at this trade. So we're back above that. So we're 92.75 is our entry. I've got 2 points locked in. I'm going to try to lock in 3 points. There we go. Bottom of value. That's perfect. There's 4 points coming out. We can lock in 4 points if it gets above 97. Again, always let it get above a quarter number before you move your protective stop up. So let it get at least up to 97.5, and then I'll come up a few more ticks. But it's getting sold right here. So if I move up, I'm going to get hit. I might get hit anyway. Yeah, I did. All right. That was fun. That was perfect too. The timing for that was absolutely perfect. Wow. Okay. I couldn't have shown you a better example of overnight behavior than that and traded it. And look at how we have a beautiful clean low now, which we did not have before. Nice volume profile. The poor weak low is gone. I don't know. Yeah, we got the unfinished business too. How about that? Surprise, surprise. The structure actually was right. Yep, we cleaned up the unfinished business. Nice. We put in a price rejector at the high. Perfect. Couldn't have asked for a better move. That was a perfect example of how to trade that and how to manage the risk and how to scale it. Boy, it's starting to get energetic again to the downside. I'm tempted to start wrapping up on that though. I could not have given you a better example than that one of an overnight trade. And now I'm tempted to maybe get some sleep and trade the open. There's still some good action here, but that was the best setup we had in this hour easily. And we've been going an hour and 10 minutes. And that, again, if you can make a couple $100 in an hour at night, that's pretty cool. Let's see what's our P&L here. 378 before commissions, and we're trading micros. So yeah, that's nice. It's over $200. Take it. In an hour of work in the evening before going to bed, if that's your timing. All right, good energy to the downside. There's some more trades here, but I tell you guys, I didn't have more coffee on when I took that little minute break. And I'm starting to fade, so I think I'm going to wrap it up here. I could not have shown you a better example than that one, so I'm glad we got that. Are there any questions? Let's see. Training my brain to do the opposite. My initial instinct to sell when there's a stops run. Yeah, that's why they run them. Now, it's important to understand, Chris, that the a stops run can be the beginning of a high momentum move. But this time of day, this type of stops run like that, where there's a sudden burst of energy and there's liquidity in the direction the energy's going, that's whenever I see that, I get really suspicious. And during regular trading hours, you see it too. It's just harder to see because there's so much more volume. But this is a very common behavior of larger players in the market. They will park liquidity where they want to trade, and then they will push the market that way by trading smaller orders than their liquidity. So let's say, I want to buy 500 down there at 94. I start selling, or excuse me, at 91, let's say. I start selling at 96, and I sell, 5 or 10 at a time, and I push it down a little bit. So maybe by the time it gets down to where I want to buy, I've sold maybe 100. And then I buy my 500 and the net result is very profitable. There's a lot of that kind of action when the liquidity is thin and when the players that do that type of thing perceive that they can do it. And that's a judgment call on their part. They also use, particularly in ES, there's a lot of algorithms that run around the liquidity and the movement. So you always want to watch that 3-tick rotation that I talk about all the time in ES. If you watch just the 3-tick rotation and the quarter numbers in ES, you could trade all day just off those two things. It's that predictable. But you also have to calculate into every single trade you do, okay, what if they run that further than I'm prepared to go? And what if, it goes against me? And that's why, sometimes it's not necessarily take the trade off, but sometimes you take a little size off, take some of a loss, but you stay in it. Sometimes you get out completely. Sometimes you really scale hard into stops runs because it's really obvious it's not going to go any farther. But until you've done it a few times, there's no way I can tell you, okay, if X plus, W happens, then you do B, and if it's F plus G, you do A. There's just nothing like that. It's much more analogous to something like driving, where driving is a lot of decision making, but the decisions all work together. Like you look in your mirror, who's behind me? How close are they? What's in front of me? Am I changing lanes? Where's the traffic? How is it changing? You're constantly reassessing. And if you think about trading that way, particularly if you're scalping, it's much easier than having like a fixed set of rules. So the second I see a stops run like that, I get suspicious of the motion. It makes me think there's going to be a reversal. Doesn't mean there always is, but my brain goes there because that's the opposite of what most people do, like you said, and that's why it works for the people that do it. And if you're not a really big hedge fund style trader in the futures market, in my opinion, there's two ways to make money, in my opinion. If you're not one of those big traders that can actually, move the price around with your liquidity, and none of us are. So if you're not one of those, you have two options, I think. One option is to try to think like those people, and you can't do what they do, but you can be like, the creatures that follow the sharks around and eat the leftovers, and you can do that as long as you stay out of the way and you don't get eaten yourself. And that's my approach. I really like to get a sense of that. The other approach that is profitable also is to get really clear statistical edges on certain times of days and conditions, like the initial balance break or the first hour low, or excuse me, the initial balance break either way, or the statistics on double breaks or the statistics on gaps and breaks. If you use those, you can do the same thing over and over again every time it sets up, and it works or it doesn't. So that requires less discrimin sorry, I'm getting tired. Discrimination in your decisions. It's more mechanical, in other words. Um, but I also, if you're going to do that, you have to have really good statistics on the times of days and the conditions you're trading. And that's the main reason I like this price action style that this whole class is about, the chart to dome class, is you can do it any time of the day or night. You just have to get tuned into what's happening at the moment and then play it. Here we are down at the low again. Could you play here? They're stacking on the sell side. You definitely could play. You want it to go lower to do it, but it might not. Let's see here if we can get a fill right there. I'm trying. Okay, the ledge went. I got a 5. Let's see if we can get another one. We did. Okay, so there's a 10. Now you have to be prepared to scale hard into that liquidity or to take profits as it bounces, which is what I'm doing. So again, 3 ticks with a 10 lot is a really nice profit real fast. There it is, All right, I'm going to flatten that out, and you got to feel it. Yes, that's absolutely true. Okay, I'm going to go ahead and wrap up here. I think this was a good little session. We did what, an hour and 20 minutes, and I think it was productive. See, this is what a stops run looks like on the footprint. See at the bottom of NQ here, where there's just gaps and zeros, that's a stops run. So they pushed it lower just enough to buy it, and then it bounced a nice 10 points. See, they're classic stops run, whereas ES left unfinished business down there. And so this looks to me like it's probing lower, and the big guys are both shorting it and pushing it lower, and they're buying it back into the range. This feels like they're doing both here. But the dominant energy is definitely down. See the aggressions on the downside. So, some instructors would tell you, oh, you should only be playing this short because the dominant energy is short. No. In fact, in those conditions, sometimes the reversal trades are the easier ones to get because they're so clear, as long as you're nimble. All right. Thank you, Peter. I appreciate it. Thank you, Chris, Donna. Thanks for coming. Glad you guys stayed awake with me. And we will do Trading the Open at the usual time, 6:15. So that's in about 5 hours and change. So I'll see you then. Get some rest. I'm going to do that. Thanks for coming.